Hello everyone, welcome to the AdCup Show. Imagine waking up tomorrow and finding that the US dollar is no longer the king of global trade. Oil, gold, electronics, car, and even your morning coffee, all priced not in dollars but in Chinese yuan. That sounds like science fiction, but China has been working for years to challenge the dollar dominance and make its currency, the yuan, a true global heavyweight. They have even started actively courting foreign central banks to store their gold reserves in China through the Shanghai Gold Exchange (SGE). But here's the big question. What exactly does China need to do if it wants to replace the dollar with the yuan? And is it even possible for any currency to replace dollar even if dollar stays no longer as the world's reserve currency? Let's find out. To understand what China has to do, we first need to know why the US dollar became the world's most powerful currency in the first place. So after World War II, the world needed stability. The US economy was the strongest, and Bretton Woods Agreement of 1944 made the US dollar the central currency, pegged to gold. Even when the gold peg ended in the 1970s, the dollar stayed supreme because it was trusted, liquid, and was backed by largest economy and military in the world. Today, the dollar makes up around 58% of global foreign exchange reserves, about half of all global trade invoicing, and nearly 90% of all foreign exchange transactions. From oil to wheat to high-tech chips, the dollar is the default currency of global trade. Of course, dollar is now on decline and countries are trying to find alternate of it. So for China to dethrone the dollar, it must replicate, and in some areas, surpass the strength that makes the dollar so dominant. Number one on the list is trust. A currency is only as good as the trust people place in it. The US dollar is not just about paper money, it's about confidence that the US government won't suddenly change the rules overnight. Investors trust US financial data, they trust American courts to enforce contracts, and they trust that their dollar can move in and out freely without political interference. China, on the other hand, struggles here. The yuan is tightly managed by the People's Bank of China. Exchange rates aren't freely determined by market, and foreign investors often fear that Beijing could change the rules if things get tough. So if China wants the yuan to compete, it must build transparency. That means clear economic data, predictable monetary policy, and legal protection for foreign investors. Without trust, no amount of trade or military power will make the yuan a true rival to the dollar. Here's another big hurdle: convertibility. The US dollar is fully convertible. If you are a central bank in Africa or an investor in Europe, you can move money in and out of the US with almost no restriction. The yuan is not like that. China keeps strict capital controls to prevent too much money from leaving the country because they fear the capital could destabilize their economy. But those same controls also scare off global investors. Why would you hold reserves in yuan if you can't easily sell them, or if Beijing might suddenly freeze the movement in a crisis? So China faces a tough choice. To make the yuan global, it must liberalize capital flows, which means opening up its financial base. But doing that means giving up a huge tool of economic control, something the Chinese Communist Party has relied on for decades. It's a classic dilemma: stability at home versus power abroad. It'll have a political repercussions. Now let's talk about safe assets, the holy grail of reserves currency status. One of the biggest reasons central banks hold dollar in US Treasury bonds. They are deep, liquid, and considered the safest investment in the world. In times of crisis, everyone runs to US Treasuries. China does have a bond market, but it's nowhere as large or trusted. Foreign investors complain about lack of transparency, state interference, and limited liquidity. If China wants the yuan to become a true reserve currency, it must build a massive, reliable bond market that foreign central banks and investors feel safe holding. That means allowing market to set interest rates, improving transparency, and reducing political control. Otherwise, the yuan will never be able to offer what treasuries do: a safe place to park trillions of dollars. Another major step is making the yuan the default currency for trade. Right now, nearly half of the global trade is invoiced in dollars, even when the US isn't involved. For example, if Brazil sells soybean to India, chances are high that the transaction happens in dollars and not in Brazilian real or Indian rupees. However, countries are now trying to find out ways in which they can deal in local currencies. China is trying to change this. Through the Belt and Road Initiative, it has encouraged countries to use yuan for infrastructure loans and repayments. It has also been pushing for oil and gas trade in yuan, especially with Russia, Iran, and potentially Saudi Arabia. This is often called the rise of petro-yuan, but it's very limited until now. If China can convince major commodity exporters, oil from the Middle East, metal from Africa, soybeans from Brazil, to accept yuan instead of dollars, then global demand for yuan will skyrocket. But here's the catch. Those exporters must also trust the yuan they earn can be freely used, invested, and converted. And that loops us back to the issue of convertibility and trust. This is also very risky because in this case, America won't sit quiet. They will react, and the reaction will be violent in nature. Now let's talk about plumbing of global finance, payment systems. Today the dollar dominates because of networks like SWIFT, CHIPS, and FedWire, which allow trillions of dollars to move around the globe daily. But these systems are heavily influenced by the United States, which is why Washington can cut countries off with sanctions. They did it with Russia. China has developed its own system called CIPS, or the Cross-Border Interbank Payment System. It's still much smaller than SWIFT, but it's growing. Alongside this, China is pushing its digital currency, the digital yuan or ECNY, which could allow countries to bypass dollar networks entirely. If widely adopted, these systems could reduce the US ability to weaponize the dollar and give the yuan more room to grow. But again, adoption depends on trust and usability. Right now, most global businesses still prefer SWIFT and dollars because they are faster, deeper, and more reliable. Let's be honest here, money and power are linked. The dollar's dominance isn't just about economics, it's about America's global military footprint. The US aircraft carriers patrol the world's sea lanes. US alliances through NATO, the G7, and other groups ensure that much of the world's financial system revolves around Washington. China has grown militarily, but it does not yet have the global reach to guarantee trade flows in the same way. For countries to rely on the yuan, they must believe that China can provide long-term stability and protection in times of crisis. Otherwise, they will keep returning to safety of the dollar. What I'm trying to say here is that China needs to build alliances and partnerships which last for decades. And such alliances aren't built overnight. They take time and conditions. China needs to find its Japan, Germany, Saudi Arabia, Britain, etc., which will play their role in keeping China as a superpower. Now the question is, can opaque China build alliances like how America built throughout the 20th century? And then there is politics. Investors like stability, but they also like predictability. In the US, despite its political drama, institutions are relatively transparent and the rule of law protects investors. China, however, has an authoritarian system. On one hand, that provides stability, no sudden changes of government. But on other hand, it creates unpredictability because the Communist Party can change rules overnight. Think about the crackdown on tech companies or property sector. Foreign investors worry if Beijing can do this domestically, what's stopping them from doing it to foreign investors? So if China wants the yuan to become a global currency, it must reassure the world that politics won't interfere with finance. That's a huge challenge because it would mean loosening state control, something the party may not want to do. Finally, China will probably have to change its nature of economy. China spent decades in learning the skills of manufacturing anything and exporting it to the world at an extremely cheap price. This has to change if yuan has to become a global currency. Basically, China will have to give up its manufacturing and become a consumer market, creating massive trade deficits in order to build demand for yuan globally. Now, there are a couple of things which we need to understand here. China's consumer market has peaked long back, and China has around $1 trillion of trade surplus. The question is, will China reverse all this and give up on its manufacturing? It's unlikely to happen, but even if it happens, then which part of the world can manufacture and scale up like China? As of now, there are none. Now let's put all this together into a timeline. China will continue pushing the yuan in regional trade, especially with Belt and Road partners, Russia, and oil exporters. It will expand CIPS and digital yuan adoption. but the dollar will remain supreme globally for as long as America is able to run its debt-based consumption model. If China can liberalize its financial markets, build a deep bond market, and convince major commodity exporters to use yuan, then the yuan could become a serious secondary reserve currency, especially across Asia, Africa, and Latin America. Only if China manages to combine global trust, full convertibility, military power, and political stability could the yuan challenge the dollar as the #1 global reserve currency. That's a tall order, and it may never fully happen. But it's definitely possible that the yuan will share a stage with dollar as one of the world's two main currencies. So what does China have to do if it wants to replace the dollar with yuan? In short, build trust, make the yuan fully convertible, develop safe liquid bond markets, expand trade invoicing in yuan, especially for oil and commodities, grow its payment systems like KIPS and digital yuan, reduce US financial leverage, build alliances, become a consumer market, create trade deficits to have demand for yuan, and back it all up with political and military credibility. But perhaps the biggest challenge is internal. To make yuan global, China would have to give up some of the very control that keeps its system stable today. That's a paradox. More freedom means more risk at home, but more power abroad. Will China take that risk? That's a trillion-dollar question. The dollar's dominance is ending, but will yuan really replace it? Or is there any other currency which can replace the dollar? Or is the world heading towards a system where it'll have multiple currencies at work? Countries will be free to choose and build their own systems. Drop your thoughts below in comment section, and if you found this analysis insightful, then don't forget to like, share, and subscribe. I'll see you in the next one. Peace out.